one of those key indicators is jobs numbers. Usually in the U.S., it's around 200,000 jobs a month that they're sort of expecting or targeting. Here, it was significantly less. So it's a situation where jobs numbers come in worse than expected. You think, oh, the economy's not growing, but the markets take that and say, oh, no, that's a good story, because it means that the Fed is less likely to hike rates here and more likely to stay stable. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. All right, here we go. It's Friday. We're back. It's a quiet week, a holiday week. Two holidays. We had Canada Day on Monday. We've got markets are closed in the U.S. for 4th of July. We've got a heat wave going through the city. We've got a little bit of a heat wave in the markets too. Markets have been going up and moving in the right direction. But how you doing over there, Greg? What's going on? What's happening today?
And a little bit of a heat wave in sports too. We got Canada, Morocco tomorrow, World Cup round of 16. So that will be super exciting. So I'm looking forward to that.
Oh yeah. What's your prediction here? What's your forecast?
Well, obviously, probably a little biased. My thinking is there's been bigger upsets already in this World Cup. Obviously, Canada is climbing an uphill battle, but I think we can make it difficult. And it's the World Cup; anything can happen. So we'll be cheering hard for them. And you never know. A lot of people thought we'd be playing Netherlands. We're playing Morocco, so who knows? But I think we'll be competitive.
Yeah, I mean, soccer feels like that one of these sports where you can see a lot of upsets. Anything, maybe that's what makes it so exciting. Anything can happen. So we'll keep our fingers crossed. I didn't think of Morocco as a powerhouse soccer team either, but I guess they're pretty good.
Yeah, they're pretty good. They've gotten a lot better actually within the last 5 years or so. And fun fact, Canada played Morocco in the last World Cup, which was Canada's first World Cup. They played Morocco, and Morocco's gotten better, but so has Canada. So we'll see. 50-50.
Fun to watch. But how is your Canada Day? You managed through the heat wave. Okay.
Managed through the heat wave. We were in the city, so we were just touring different splash pads within the city, trying to stay cool. But what about yourself, Will?
Yeah, I mean, that must have been just about the hottest day that I can remember. I think I got in the car at one point and it was reading 42 or something like that. So I don't remember a hotter day in Toronto, but seems to be still hot but cooling off a little bit, which is good. But at least we've got some summer weather. It's some real summer weather. We had about 6 months of winter, so we can't complain. We can't complain too much. It's finally here.
Extreme cold, extreme heat. I thought you'd be wearing the short sleeve, Will, but you still got the long sleeve despite the heat wave. So
we got good air conditioning in the Aretec offices, so it's all good. But yeah, look, let's get into markets. Enough chit chat here. But look, bit of a quiet week, just because it's a holiday week. There's not a whole lot going on, but markets have still continued to be resilient. We've had a pretty strong first half to the year. Things are still moving in the right direction, which is good to see. I think some of the things we were talking about in the last couple of weeks, like the real assets, the inflation story, we want to build on that a little bit, because the main headline this week, or the main driver this week, was the jobs report. So what's happening there, Greg? What's going on with the jobs report?
Yeah, so it's a good point. So that was the main piece of news this week. And it's actually interesting, Will, and we're going to get into it more. So it was actually a weaker jobs report, meaning that the U.S. added less jobs than expected in the month of June. But that it was actually good news for markets overall. So maybe, Will, can you just kind of explain why that would be?
Well, yeah, that's one of these bad news is good news scenarios and situations. But what we've seen causing a little bit of pressure this year is new Fed chairman, potentially more hawkish, meaning more likely to raise rates. We've seen inflation concerns, as we were talking about last week. So the potential for higher interest rates, but a lot of that stems from if the economy is overheating, running too hot. So one of those key indicators is jobs numbers. Usually in the U.S., it's around 200,000 jobs a month that they're sort of expecting or targeting. Here it was significantly less. So it's a situation where jobs numbers come in worse than expected. You think, oh, the economy's not growing, but the markets take that and say, oh, no, that's a good story, because it means that the Fed is less likely to hike rates here and more likely to stay stable. And so we saw a bunch of ripple effects through the markets. Interestingly, still trying to unpack that, but the Nasdaq stuff didn't really do anything in general. Like the AI stuff started to slow down, but things like gold, some of the commodities, precious metals actually rallied quite a bit, which is good for our portfolio, our holdings. The dollar weakened because the dollar is really tied in with interest rate and bond yield expectations. So you got kind of a sort of counter or different sort of rally out of markets overall based on that news. So that's the story here right now. Bad news seems to be good news, and our portfolio, all things considered, responded quite well. And you got some of the stuff that maybe in the last little while had been a little bit more beat up. Some of the, say, the Dow names, as opposed to the high flying tech names, the semiconductors in the last week. You're just seeing those pick up, markets broadening out a little bit, which is probably good and healthy, because I've said for a while, although we have our fair share of it, the semiconductors, all the chip companies, those types of names, they're running pretty hot. So for them to get a little bit of a pullback and cool off a little bit, probably not bad for markets, and have some other areas step up and carry some of the weight here.
And Wills, a lot of what we saw that showed a lot of strength this week was some of those maybe more names that have been a little bit beat up, but more of like the value, more of like the Dow, TSX correlated stuff, which we've been talking about. We have a lot of that. So I guess, is that why it's important to have like a little bit of a balance in the portfolio?
Yeah, it kind of fits with the story here, as we are looking for more correlation or more connection to the TSX and the Dow. Not that it's a perfect correlation, but those tend to be those more traditional value, dividend, cash flow, hard asset or real asset at businesses, as opposed to, like, at this point, the S&P 500 is something like 50% technology. The Nasdaq is significantly more than that. So the weightings are they're just sort of different markets. I mean, you did see some of the areas this week that we saw picking up. We saw things like cybersecurity, defense. Just some of the other areas, like even some of the FANG names have been picking up this week, which is good to see. But we've got a good mix balance across the portfolio. Gold's finally catching a little bit of bid after the last few months. So a little bit of a counter rally this week on the back of that news. So kind of interesting to see. But again, it is summertime. It's kind of a quiet week here. But that's the big story for the week.
Yeah, so well, kind of the first half of the year, it was all about war in the Middle East, Iran, oil prices, what's going on in the Strait of Hormuz.
Yeah.
That has kind of settled down. And would you say the story or the narrative for the second half of the year is going to be much more focused on interest rates, inflation, jobs number, like what's going on in the actual economy?
Yeah, I mean, look, we don't never know what's going to happen here. Like, we're living in an unpredictable world, but right now, at least, the story is really driven by the Fed, and that's the narrative, which is all about the economy. It's all about interest rates, inflation. What's the Fed going to do? How they're going to respond to what's going on. I mean, I think, yeah, the fact that the markets, that's really the big story of the year. The fact that the markets have made it through a pretty significant event. Maybe not as big as some of the others, but I mean, what happened in March was pretty meaningful.
Yeah.
The war and everything that happened there. The fact that markets weathered through that, went through a correction, maybe not a major market event, but certainly a market event, and now have come back to where we see them midpoint of the year, where you're up like high single digit, low double digit type numbers out of the markets just for the first half of the year. That looks pretty good. And now we're transitioning this story of, all right, what's going on with the Fed? How are they going to respond to things? I think the some of the themes like inflation we talked about over the last couple of years, that whole story is okay. Oil prices have been elevated, supply chains have been disrupted. There's all kinds of onshoring, reshoring, stockpiling of resources. We've had tariffs to basically unwind. So I think all that stuff potentially factors into the inflation story. But when we're seeing just expectations start to change and shift, that's good for markets. So I think it's the sort of thing that if the Fed, we've got a new chairman, if the Fed can manage this well and sort of thread the needle, which is always the challenge. And I think sometimes historically, if you look back over the years, that's been done better than others. If that can be done well, managed, markets should stay relatively stable. I think the other big thing that's on the horizon, keep in mind, which you can't turn on the news without hearing about it, is the midterm elections. And I think there are some implications too for things like how markets respond to that. Bond yields, all those things will potentially factor into that. So I think that's going to be another one to watch. Tough to tune out the news and not hear about that, but there's probably going to be a lot of political jockeying and noise as we move into the fall on the midterms.
Yeah, and to your point, Will, what you've said before is Trump uses the stock market as a barometer of success. So I'm sure he's going to be trying to do anything that he can to just make sure the markets are happy and healthy and kind of moving in the right direction. But
Yeah, and I think there's a good chance, based on everything that goes on in the world, that that the balance of power shifts a little bit, and I think that could potentially have, if you look at things like bond yields and interest rate expectations and inflation expectations, based on whether kind of where the balance of power is, and whether it's all three areas are controlled by the Republicans, Democrats, et cetera. That balance of power shifting can have an impact on inflation, bond yields, and interest rates. That might be a whole nother podcast to try to unpack when you look at it historically next time, but only to say that could potentially shift some of those expectations, and it's something to watch. And it really ties in with that inflation story, the real asset story, the bond yield story, where markets are responding, kind of the growth versus value, or think of it the TSX and Dow versus the S&P 500 and the Nasdaq. Not that all markets aren't correlated and tied together, but there's certainly different makeup under the hood in both those markets. So we are trying to balance that out, but I would say our correlation or our mix is a lot more towards the Canadian market, a lot more towards value and dividend type names, as opposed to those big heavyweight growth technology type of names.
yeah, absolutely. And Will, as lastly, as we move into the second half of the year, obviously no one can predict where the markets are going to go up, down. Nobody knows. But I guess what would be your message to investors, just from an overall kind of mindset perspective, knowing that there's still going to be a lot of noise and headlines and news flow for the next for this half of the year?
I mean, look, there's always a lot of noise. So I mean, I really can't think of a time when it's been smooth sailing in investment markets, and probably a lot of times the things you think that are going to be a big deal and are going to make a lot of noise, whether it's the politics or things like midterms or elections or some expected event, ends up not being what causes the noise, and it's some other thing that comes out of left field, right? I think even we've seen it, right, in the last couple years, of the things that impacted markets the most. Tariffs was one of them. The other was this war, and both were not necessarily things that everyone was sitting around and predicting or saying this is coming up. But there could be factors that come out of left field. But there's really never a time that markets are calm or smooth sailing, and that's volatility is sort of big part of the price of investing and seeing those returns and seeing those long-term results. And for us, I mean, we're sticking with the process, sticking with the strategy. We've got the right portfolio, right strategy to navigate through these sort of conditions, regardless of what's going to happen out there. But I think, like, as we've seen, even through the first half of this year, they've had good numbers, and a lot of people coming in this year saying, "Oh, the markets can't repeat and can't do what they've done the last couple of years," but they've still managed to keep going. So, I mean, we want to make sure we're participating in that, capturing what we can, make some hay while the sun's shining. But if things are changing, we'll govern and manage the portfolio accordingly. But I think there's still the good potential here for good solid results overall as we move through 2026.
Yeah, so I think we're just going to obviously continue to stick with our process. And you bring up a good point, Will. It's rarely ever smooth sailing when it comes to the markets. And a lot of people coming in 2026 were saying, if you told them markets were going to be what they were up or what they're up now halfway through the year, probably no one would believe you. So markets can continue to surprise both to the upside and downside.
Oh yeah. So we will keep managing, staying with the process, and ultimately we want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. That's what we're all about. That's what Aretec Wealth is all about. Hopefully, everybody could stay cool this weekend as well. Everybody enjoyed their Canada Day and the start of summer, and we'll be back with everybody next week.
Have a good one.